So I'm really pleased to be joined by Patrick de Cambourg. He is the chair of the European task force, which is looking at the whole question of non-financial reporting standards from the European perspective. For those of you who've joined some of the sessions earlier, you'll be very familiar with a lot of the developments. This is an area that is moving forward really at pace. And I think one of the jurisdictions that is pushing potentially the hardest is Europe. And we have a lot of interest from people around the world in the developments that are happening. So Patrick, I'm delighted to have you here with us. This is an area that you have been very heavily steeped in for many years in your role as chairman of Mazars, the role that you have in terms of the French accounting standard setter, Autorité de Normes Comptables, and also AMF, so the French Autorité de Marché Financière. So setting the standards, looking at the rules, but then when it comes to non-financial standards, I'd be really interested to hear your perspective. So Patrick, I'm going to ask you just to give a bit of an overview of what's happening in Europe first, and then we'll make sure that we leave plenty of time for everyone to get their questions answered. Over to you.
Thank you very much. A warm thank you to His Royal Highness, the Prince of Wales, and to IFRS for this invitation to the summit. It is an honor and a privilege to be with you today for this conversation. I look forward to our exchange of views, of course. As you may know, the European Union has been and is developing, as you mentioned, significant policies in the area of sustainable growth, sustainable finance, and sustainability reporting. In such a context, the European Commission has launched in 2020 three key reporting-related initiatives. The first initiative is at legislative level, the revision of the current Non-Financial Reporting Directive, nicknamed NFRD. A legislative proposal is expected for March 2021. The second initiative is preparatory work on the EU sustainability standard setting mechanism, for which the task force I chair has been mandated and which is requested to deliver its proposals for the end of January 2021. I will explain where we are as of today in a few seconds. Let me mention in passing as a general caveat that my presentation today cannot be interpreted as necessarily reflecting the task force final views, of course. The third initiative, because it's a triptych, the third initiative is a reflection on the governance of EFRAG, should it be assigned a standard setting role. This is conducted by Jean-Paul Gauzès, a former and longtime MEP and the chairman of EFRAG, under an ad personam mandate. His proposals are due also at the end of January. The task force, a little bit of background. The task force I chair has 35 members coming from the sustainability reporting stakeholder groups active in the EU, and also from more than 15 member states. Each member dedicates 2 days a week as a minimum, which is quite a commitment for high-level people. In addition, the task force benefits from the input of representatives of 9 EU public authorities, including the ECB. The project is supported by a 10 full-time equivalent secretariat, which has been organized on a contribution in kind basis in an emergency. We operate virtually 100%. We are saving carbon and we're gaining time somehow. The task force had its kickoff meeting on September 11 and follows a three-phase project approach. Phase 1, assessment until the end of October. Phase 2, proposals until the end of December. And Phase 3, conclusions and outreach during the month of January. The task force has signed memoranda of cooperation with a significant number of international sustainability reporting initiatives, and therefore benefits from a fruitful dialogue with them on key matters. So as you have understood, the key priority for the task force now is, of course, to deliver its recommendations on sustainability standard setting to the Commission under the constraint of the very tight deadline I mentioned, 4.5 months to do that. It's a short period of time. These recommendations will strictly concentrate on EU standard setting as requested. Even if there is an obvious need to articulate standard setting with the revision of the legislative level underway, and also with the governance aspect of the question. From a general standpoint, in the task force view, sustainability reporting standard setting should cover 3 pillars. Pillar 1 is the content or substance of reporting. Pillar 2 is what we would call the statements or the reporting structure. And pillar 3 is classification and taxonomy in a digital world. The first pillar is obviously the most substantial, but the other 2 must be addressed in parallel. Recommendations will build upon the high-level assessment points that the task force presented in its progress report early November, following a 7-week only phase 1. Let me now briefly mention for your consideration and for this conversation, in substance, the 6 high-level points our progress report highlights. 1, EU momentum. You mentioned the hardest push, maybe. So it's true, there is a strong momentum in EU sustainability policies with very significant direct and indirect implications in terms of sustainability reporting. These policies encompass sustainability reporting per se, with, as I mentioned, the upcoming revision of the Non-Financial Directive, but also a significant number of political and legislative initiatives with reporting consequences. Notably, but not exclusively, the Sustainable Finance Agenda and Capital Markets Union related matters. The success of these policies implies or is directly related to the availability of relevant, reliable, and comparable sustainability data or information. And the question and the key point is that as of today, such an availability is not ensured. As a consequence, there is an urgent need for the planned second step in sustainability reporting to happen, following what I would call NFRD 1. So we are moving to NFRD 2, or rather SRD 2, Sustainability Reporting Directive. In order to foster, of course, coherence and substance in this area. 2, existing initiatives. The Executive Vice President Dombrovskis, in his mandate, clearly specified that it would be of interest to consider the potential input from existing initiatives. There is a host of initiatives addressing sustainability reporting challenges, and I would say that more initiatives emerge on a regular basis. Around 100 are under review by the task force, with many proposed KPIs. We identify more than 4,000. They can be generic, topical, sectoral. Most of them operate on a voluntary basis. They contribute to the general trend of innovation and implementation in sustainability reporting, but the overall landscape remains much too fragmented. Preparers and users have difficulties to navigate this fast emerging corporate reporting space. These initiatives constitute interesting standard setting material, and detailed input is currently under assessment. Beyond market forces, mandatory requirements under public policies are a critical factor to foster comparability. We have to move from a voluntary basis to a mandatory basis, or at least to combine mandatory and voluntary. There is a clear need to coordinate efforts deployed at jurisdictional level, like in the EU, where public legitimacy is more easily found, and also the global level, because a number of issues are global and financial markets are also global. 3, conceptual framework. Standard setters, sooner or later, operate from an explicit or implicit conceptual framework. In this respect, the revision of the NFRD itself might clarify certain EU concepts that would further guide the work of a standard setter. But robust tools are also to be considered because they are necessary at standard setting level to embody the concepts once they have been clarified. 8 conceptual areas have been identified by the task force that need to be addressed. In this regard, I will mention a few. In this regard, double materiality, addressing both financial and social/environmental dimensions, is a clear marker and deserves a particular attention. There is some sort of a religious debate about that topic, but what is important is to make sure that we have tools to clarify what we want to say. So does also the relevance of topics and subtopics in order to create a comprehensive reporting structure, including intangibles. I mention intangibles because sustainability reporting is often considered as punitive. I think it should be also concentrating on the positive aspects of which are not captured by financial statements in particular. So does also the necessary focus on forward-looking information. You know, if we operate with a rear view mirror, we are not going to go very far. We might bump in the stumble in the next wall. So does also the need for sector-specific information in addition to sector-agnostic reporting. 4, interconnection. This is a problem we've tried to concentrate upon. Interconnection between sustainability reporting and financial reporting is a priority in order to support a holistic approach to corporate reporting as a whole. The current disconnect is detrimental in many respects. In order to tackle this issue, there is a need to give sustainability reporting a similar status to the one acquired by financial reporting over time, and to organize continuity between the two, addressing border issues, gray areas, reciprocal input, and migrations over time, and hence avoiding gaps and unnecessary overlaps. Sustainability information begins where financial information stops, and vice versa. Perimeters need to be clear in order to avoid blurring one at the expense of the other. I have a theory which says that corporate reporting must walk on 2 legs, one sustainability one and one financial one, and that in order to do that, you need a good coordination by a good brain. So sorry for this image. So 5, financial institutions. Financial institutions are confronted with specific challenges, in particular in the context of the strong EU political push in the sustainable finance area. These institutions are at one the same time preparers and users of sustainability information. Therefore, the reporting of their indirect impacts require significant and timely sustainability standard setting efforts in terms of availability and quality of sustainability data. Failing to do so, the risk of greenwashing would have to be seriously considered with all its consequences. 6th and last point, reporting structures and taxonomy. Beyond substance, and despite reporting momentum, in some sort of a sandbox approach. The current reporting statements in the EU are not what they should be. Reporting structures, location of reports, level of assurance vary a lot. In this context, for obvious reasons, digitizations remains embryonic with no data taxonomy available. So these high-level assessment points support the view that standard setting efforts are indeed much needed, which was the assumption of Executive Vice President Dombrovskis, but we are happy to confirm that a dense and relevant level of good standards, a robust set, is needed. These assessment points are driving the work the task force is currently performing on recommendations. Our goal is to have a good set of recommendations ready at task force level following Christmas. In order to get input from stakeholders beyond its members, the task force is organizing, as we speak, 7 outreach meetings to be held mid-January. And beyond the end of January, EFRAG, of course, stands ready to support the Commission further. Maybe a couple of words for your information regarding Jean-Paul Gauzès' personal mandate to consider governance changes to EFRAG. Very simple. Jean-Paul published a progress report in November. By the way, our progress report both reports are accessible on the EFRAG website. Jean-Paul's report suggests a 2-pillar structure for the future. A financial reporting pillar dealing with endorsement of IFRS as is currently the case and which would not be modified, and a new pillar for sustainability information with governance structures appropriate to its particular objectives. Jean-Paul has launched a public consultation to refine these recommendations. So these are my introductory remarks. Thank you.
Fantastic, thank you, Patrick. And we've already had a number of questions coming in. I'm going to take advantage of my role as chair and ask a couple of my own first, but then I'll come to the audience questions and we'll make sure we've got time for those, so do keep them coming. I think the first question, you've covered a lot of ground there. We can make sure that we post those links in the chat and then alongside the session on the IFRS Summit platform. I'd like to come to that whole question of materiality first, because I think that that's one of the things that has really differentiated the approach that that Europe is talking about going. And you touched on that double materiality concept there. I think some people have talked about things like dynamic materiality, or the fact that it's very hard to distinguish or unpick what might seem like it's an impact from a societal perspective, the impact of an organization on people on the planet versus the other way around, which tends to be the flip side of that materiality. So what do those issues mean for the risks, the opportunities, the performance of the organization itself? And certainly one of the themes over the last 2 weeks with the summit has been the fact that this year of all years with the pandemic has reinforced that whole sense of what we need in terms of a stakeholder approach from the corporate sector. So could you say a bit more about the thinking behind that, and in practical terms, what might that mean for the kind of standards that emerge?
Okay. First of all, the EU has a clear orientation in that regard, and has clearly stated that they want to operate from a double materiality approach. Now, that being said, and I want to avoid what I mentioned earlier, i.e. some sort of religious debate, because at the end of the day, it's a question of complementarity, and to a large extent, it's need to be operationalized. Because I hear what people say. Some people say everything is pre-financial anyway. It's true. But on the other hand, the level of intensity of a social or environmental problem as regards immediate or medium term or even short term or medium term horizons can be low. So financial information stops when there is a likelihood of having to book something, a liability. So I think there is a huge space, even if everything was financial in the end. Maybe the pandemic affecting the CEO is a key problem, but and that's not booked. So even if everything might be considered financial, you need to have a broader stakeholder approach, because and therefore you probably have a spectrum, and that's where we are working on at the moment, to try to find an operationalization system to approach to determine what is material in accordance to the various stakeholders, and also to define the potential financial implication, when, for how much, and also some principles might not have immediate or direct implications, but are just corresponding to an ethos, a business ethos. And so there is a big issue here to operationalize double materiality, which I think is key. You need to have what we call the outside-in impacts on the performance of the company, but you also need to have the inside-out impacts on your environment as a business, with what I would call ultimate financial materiality, which is called the rebound effect or the boomerang effect, because it's true that it comes back at a point in time. But concentrating too much on financial is not the way forward, and concentrating too much on social and societal is not the way forward. So you need to combine.
We've got a related question on this from Jacqueline, so let me just read that out. So is the materiality assessment, will it be part of a process or a session in the mandatory sustainability reporting structure? So how will the concept of materiality really unfold? And I think this touches on some of the things you mentioned around, do you go down a sector-specific route? Do you have universal topics? Are there some things that are just mandated that everyone has to report? It's a complex area to really unravel and think what makes sense. Where's the thinking got to?
This is a topic we are discussing clearly in the task force. Maybe too early to deliver a conclusion, but materiality assessment can be done by the legislator himself. He says, for me, that's what I would call legal materiality. Silence and move. Okay, no problem. I think proper materiality assessment to determine what should be the minimum requirements and mandatory requirements at standard setting level is a key task. So I don't see, and in the financial information space, it is exactly the same. I mean, you are determining what is the information which has to be delivered, and normally you explain how it should be presented. This is a standard. So you have a second level, which is the standard setting, which for me is a significant one. Then you possibly have a sector-specific assessment of materiality, because not all sectors contribute to all topics the same way. Social might be very important for some, and environment more important for others. So you also have to differentiate, possibly, when you add sector-specific information on the basis of sector materiality. And ultimately, you need to have entity-specific materiality assessment with two purposes. The first one, which is pretty technical, but which makes sense, even if I have a mandatory requirement, but I am not, in fact, the amounts or the information, the related information is of minimal importance, I can explain why I do not comply. I'm not complying because I don't want to, I'm not complying because I don't have to. But so that's a materiality assessment at entity level, first one to exclude, quote unquote. But there is also, which is in my view the most interesting, the extensions, because businesses, no standard setter may cover all the relevant issues for an entity. So you have a group of mandatory requirements. You may also have a group of voluntary standardized information, but then you have what I would call freestyle extensions. And they are deriving from an entity-specific assessment. So ideally, we should combine the 4 levels: law, standard setting, specific, which is a subdivision of standard setting, and entity-specific.
Great, thank you. And as you probably would have expected, we have a whole flurry of questions around how the work that the EU is doing is going to fit with a range of other actors and initiatives. So maybe if I go through...
I don't understand what you are talking about.
Absolutely. I know, who would have thought? So let me ask, let me start with the ones that touch on the IFRS Foundation. So you have the IFRS Foundation doing a consultation at the moment on setting up a sustainability standards board. So we've had a few questions around, will the EU create its own standards board? Would it authorize the IFRS standards board? What comes out of that? A similar kind of question is, would these standards be aimed only for a regulatory use in the EU? How about other jurisdictions, international considerations, and a few others on related topics? So how would you see all of those dimensions playing out?
I might not be the right speaker, because, as I mentioned, the task force is concentrating on technical matters and standard setting and a possible standard setting. So it's not decided yet at EU level, though I think that it's going in that direction, to be frank. Now, what I can do is quote a number of... I'm sorry, there's a horn in my street.
That's okay. You're based in Paris. At least it shows Paris is still vibrant.
Okay, so I can quote. When you don't have to read too much between the lines to see where the Commission is moving. I think that the idea is to maintain 2 key dimensions. Sean Berrigan, the commissioner in charge of, that's not the commissioner, sorry, the DG in charge of FISMA, and Mairead McGuinness said it also recently in a symposium where I was. I mean, they all say that they are a fan of global standard setting. Both are saying that, but they also say that the EU has an agenda which is urgent and which is of a huge density. So so you have to have EU standards that meet the policy ambitions in the EU and also the urgency. So that has to be delivered in a very timely way. But that does not exclude that this is considered by global efforts, and I would call it the EU is prepared to monitor global initiatives and contribute to global initiatives. So now, I don't think today that it is likely to duplicate exactly the situation that occurred 20 years ago in the financial standard setting space. Because first of all, the circumstances are different. The maturity of the topics are different. The policy commitments are different. Of course, financial markets are integrated. They were then, they are today. But when you, for instance, put the emphasis on double materiality, it goes beyond financial markets. And it is absolutely key to the identity of certain jurisdictions. They define their identity in a way that is maybe different. And I'm not expressing, I'm not considering that some are better than others, but there are differentiations. It's less united a landscape as compared to the financial one. So financial materiality is a strong driver, but other materiality is a strong differentiator. And you have to navigate in a space like that. But I'm sure that I wouldn't see why the EU would not embark upon a number of, financially material, for instance, disclosures that somehow would be a good case study for global standard setting. Global standard setting requires public legitimacy, and it's not a given. I had a conversation with the IFRS Foundation. They asked me to participate to an advisory group, and without disclosing secrets, it was very clear. I said, you have today a delegation given by public authorities, which is fine, in the space of financial information. Make sure that the various jurisdictions that are supporting IFRS or not, by the way, how they would react, because you don't want to create one more. You want to consolidate rather than create one more. So it's an open question. I think from an EU perspective, there is openness to contribute and cooperate.
And I think that point on not create one more is a good introduction to a second question that I'm sure the task force has been grappling with. And again, there's a whole series of different questions around this same theme. And that is, if you look at the existing main standard setters. So some people are specifically referring to GRI and SASB. To what extent will the EU standards work with those existing standard setters and the standards that they've produced? Is the task force going to be recommending, adopting those standards and endorsing some of the standard setters bodies? And some people have clearly been looking at the detail of the proposals that have come out and asking about, words like possible rather than probable being used in terms of the input from existing initiatives. So picking up on all of those sorts of themes. So how would you see that unfolding?
I think at the end of the day, the idea is to create a robust set of standards. Would any existing initiative be in itself sufficient? I think no, frankly. I think our assessment is that at this stage, you have good input, very good input, but none. And we have a dialogue with those organizations, and we realize that in fact we would like not the best of both worlds, but the best of all worlds, and that's what I would call a consolidation. And you will see a number of this is a possible way forward that we're analyzing, which I would call a value-added consolidation phase, because you have good things developed by initiatives in the EU or elsewhere. You have generic, you have topical, you have sectoral approaches. Most of them have an interesting angle to offer, but it's very difficult to consider that one of them would be in itself fully satisfactory for a good reason. Is that the clear customization to the EU policies is absolutely necessary. Because, you know, if I take, for instance, the taxonomy, which is something which is some sort of a barbarous word, but the taxonomy, which is identifying a number of activities in order to foster their development via the sustainable finance lever, the taxonomy requires specific information. You have also a level, you have some topics where it will be probably not easy to organize a global consensus. So between, you know, a global dimension which will try to rise the level of sustainability information and the people that are moving faster, again, this is a collaboration, and this is some sort of, you know, combination. And you cannot exclude that the most advanced jurisdictions, I saw, for instance, that in the UK, on November 9, the public authorities declared their alignment with their willingness to create TCFD compatible disclosures mandatory by 2025. Okay, you have most advanced jurisdictions, and for me, I would, sorry for this example, I would operate like a bee, i.e., you know, going to flowers and creating honey, you know, and by the way, once you have that, you also influence other players, so that's good. It's not one size fits all, I don't think.
Absolutely, and I think that whole question also comes down to timing as well, which is another of the themes. And certainly, if I think of a lot of the companies actually, you know, really want speed. They see the need for this information set, whether for all different actors, all different stakeholders.
If I may add one point,
yeah,
on the IFRS Foundation, we certainly insist on the fact that the IFRS Foundation, through the ISB, be the counterpart, because they have undone, without any question, this very big role in financial standard setting. So you don't have a proper sustainability reporting without interconnection, and therefore you need the financial reporting leg to be coordinated with the sustainability reporting leg. So anyway, the IFRS Foundation has a crucial role to play in that space, because you need to articulate, you need to, as I mentioned, you need to make sure that there is no gap, or that there are no overlaps. And that's, you know, that's not finished. We are at the beginning of the process, for a good reason, is that sustainable information is not clear enough yet.
Yeah, no, absolutely. I think that point on how actually, for want of a better word, narrowly defined financial reporting and financial reporting standards interplays with sustainability. You already have some blurring there. You've seen, and you've touched on it earlier, things like climate change clearly and climate risk is impacting how people might value assets, think about impairments, all of those.
Stranded assets, for instance, yes, of course.
So the two are already, you can see how they intertwine.
But excuse me, before it becomes a financial matter that is aligned with the accounting concepts, it is a sustainability reporting issue.
Yeah.
That's why the linkage is absolutely key. You know, an asset is not becoming stranded just like that. It's a long process, and you better have milestones before you get there.
Yeah, absolutely. Now we're getting close to the time. I'd like to try and fit in two more questions if I can. So the first one is, when might companies expect some of these changes to come through? Now, not necessarily an easy one to answer, but I think two dimensions to that. What might the ambition be from Europe of when that would come through? If I think of the NFRD, there's clearly a process in terms of the rollout and the timing, and of course, as you say, the development of the standards in the first place, if it's not using existing standards to fast track. and there's still a lack of data. So how do you balance that?
Well, first of all, this is one of the questions the Commission asked us to provide advice on, i.e., what would be the ideal roadmap. Point two, I understand that the NFRD will be, as I mentioned, the proposal would be tabled in March. You know how it works. It probably requires a legislative process to happen, and that will take a year probably. But in the meantime, standards should be prepared in parallel. And I think people are asking themselves at the moment how to do that. Because, you know, because of the urgency on a number of topics, and in order to avoid greenwashing or social washing, you need to have the two moving at the same time. And you also need to land somewhere. Would, for instance, 2023, i.e. beginning of 24 in terms of releasing the information, being the ideal target? I suspect there will be big political discussions, but we are talking relatively short time horizons here. The third point is that obviously we're not starting from scratch. If what becomes mandatory is largely the consolidation of best practices under the current NFRD, you're gaining time because in fact, you take the best performers and you try to attract, you know, via the mandatory dimension, you try to attract the other players. So this is the balancing act we are trying to calibrate now.
Fantastic, thank you. And I do think that in the interim, even when there is a very clear direction of travel, that clearly motivates the whole market to start responding early, and hopefully that can accelerate. So the last question, and then we'll just leave everyone with a few final asks from your perspective, is around stakeholders. And so I think two questions here that link together. One is around that stakeholder approach. So how can it be practical to be adopted by companies? Can you talk a bit more about how you would envision a stakeholder-driven approach to work? And then connected to that, what role do stakeholders have in contributing and feeding back? So you mentioned the 7 outreach meetings in the next phase of the work leading to the final report. So how can stakeholders get involved in that process, and which ones?
Okay, no, well, first of all, it's an open, it's an open, have a look at the IFRAG website. You will see soon the dates for mid-January for the outreach. There will be 7 I said 6 or 7 outreach meetings, you know, in the major economies, and also 2 in Brussels to capture, you know, the EU global dimension. So it is attendance free, so no problem. Everybody can attend. As regards the stakeholder involvement, first of all, the task force is a group of representatives from major, even if they operate on an independent basis, because at the end of the day, they are expected to give their final say as a person, but nevertheless, they are coming from all the environments that we can think of. And by the way, if you have a look at the proposal already made by Jean-Paul Gauzès in terms of governance, the standard setter would also be representing the various key trends of sustainability reporting, i.e. of course, the financial one with, but not only NGOs, you would have preparers that are committed to the double materiality. You would have auditors that are committed to the double materiality. You would have also NGOs, courts, consumer organizations, trade unions. So I know it's complex to operate, but that's the way it is. And in fact, in standard setting, you have two possibilities. Either you extract people and you declare and you put them in an independent environment and they operate on their personal basis and they forget where they are coming from in theory and they adopt a public interest approach, or you take people from a variety of horizons, you put them together, and while insisting on the independence, you also create a liaison with the various stakeholder groups that have an interest in standard setting. And I think that the EU is, in most cases, more clearly under, there are nuances, but under the second definition.
And I certainly think that if you look at the way that GRI has developed sustainability standard for many years, you see the practical approach that can be adopted to get that multi-stakeholder view. Now, Patrick, I'm conscious that we're out of time. So is there any final ask that you would have or final comment that you would like to leave everyone with? I think we've covered some ground. Probably we could have another day of discussion and not scratch the surface, but
first of all, make sure you bear in mind that we are in the middle of the process and I am not making recommendations or disclosing recommendations at this stage. So I would encourage the audience to have a look at our report end of January, early February. Because I think you will get more. So it's not a huge. I am a great believer, but that's a personal note. I'm a great believer that companies that are, committed to having a sustainability reporting leg as strong as the financial reporting leg, and which are also, having an overarching strategy of communication, will be better placed because one, they will operate their transitions with a lot more, insight. Two, they will communicate a lot better with their stakeholders as a whole, their investors, but also other stakeholders. And three, surprisingly, they will attract money. They will attract investment. So for me, it's a win-win. It's a win-win approach. That has been a personal belief for a number of years, and it's time that the second leg become as strong as the first one.
And I think that I couldn't agree more. I think we've seen progress on that. And if I think of all of the CFOs, investors, others we work with, I think you see that that real shift. So thank you very much, Patrick. Very insightful, very useful discussion. And we will look forward to seeing the final report coming out early next year.
You're putting stress on me.
I don't think we're the one cracking the whip.
Okay. Goodbye all.
Yeah, thanks a lot. Bye.